We will have our next guest shortly to talk about the political turmoil in Ottawa and the impact on the Canadian dollar, which actually could be positive long term. We saw the dollar up yesterday, although it is down about 7% over the past few months. Our next guest says that could change if the Conservatives eventually win the next federal election. Thierry Wizman is the global foreign exchange and rate strategist at Macquarie. Hi, Thierry. Thanks for being with us.
Hi, Mark.
So I understand you say that Canada and the Canadian dollar are now in play this year. What does that mean?
Well, until recently, we had a pretty downbeat view of both the Canadian economy and the Canadian dollar. Despite the fact that your central bank was, setting up to continue to reduce interest rates, policy interest rates. The prospects for a consumer recovery in Canada in 2025 are quite poor, especially with the overhang of consumer debt and mortgage debt in the economy. I still think that's the case, right? We don't really foresee anything happening cyclically to the economy in 2025. However, if we do get a new conservative-led government in Canada, it could change things structurally. And I think to the extent that the Canadian dollar has appreciated in the last few days in anticipation of the coming changes. The reason is because the markets and traders generally anticipate a better structural outlook for growth in Canada. Why will that happen under a conservative-led government? Presumably because this will be a pro-growth oriented government. It'll be a government, if it happens, that champions deregulation, that champions lower taxes, and by virtue of that will look somewhat similar to a Republican-led U.S. administration or Republican U.S. administration in 2025. And of course, the election of Donald Trump in November of last year did spark a good, strong rally in the U.S. dollar. So why shouldn't the election of a government in Canada that effectively does the same thing for the Canadian dollar?
Now, you say that Conservative leader Pierre Poilievre is generally aligned with Donald Trump ideologically. He's also been critical about the Bank of Canada. So take us out a few months. Let's assume a Conservative government eventually, let's call it the spring. What would that look like for the loonie?
Well, on the presumption that the outlook, the structural outlook for growth in Canada will improve, that should be good for the loonie. I mean, to some extent, the currencies are really just a reflection of the quality of policy administration in their respective countries. If you have tighter monetary policy, if you have a stronger fiscal balances, if you are able to sustain growth over the long term and not through counter-cyclical policy, but through structural growth, all of those things are good for the currency. So if we were to have a conservative-led government, let's just say it happens hypothetically sometime in the middle of this year and the market starts to anticipate it, we would have to change our view on the loonie. Instead of depreciating in 2025, conceivably can appreciate versus the U.S. dollar.
Now, speaking of the U.S. dollar, Thierry, we know that it had a big run from October through the election. It's pulled back a little bit lately, and you can tell us why. But a lot of this has to do with so-called U.S. exceptionalism under Donald Trump. What can you tell us about the U.S. dollar and the prospects under President-elect Trump?
Well, American exceptionalism is one part of the story, right? It relates to the idea that growth in the U.S. has been superlative compared to the rest of the world, including compared to Canada over the last few months. It also pertains to the view that the Federal Reserve in the U.S. is going to maintain a more hawkish policy disposition than central banks in the rest of the world. And of course, that also tends to favor the U.S. dollar. But there has been something else going on in the last few months that pertains more to the political backdrop and the political environment in the U.S. The prospect that we're going to see U.S. import tariffs imposed on foreign products coming into the U.S. generally provides a sense to the market that there'll be more inflation in the U.S. and that the central bank would have to be even more hawkish than it otherwise would be in a non-tariff situation. To the extent that that has been subsumed by the market or priced in by the market, it has certainly helped the U.S. dollar in the last few months as well. But that stands separate from just the U.S. growth story and the U.S. rate story, independently of the tariff story.
All right, back to the Canadian dollar. Do you and your team have any targets for the rest of the year?
Well, had it not been for the prospect that we could see an early election in Canada and that early election could be won by the Conservatives, which then form a government, we were still, as I mentioned and hinted at earlier, pretty bearish and downbeat on the Canadian dollar. We thought that the exchange rate, the dollar-CAD exchange rate, if you will, in this case, could conceivably go up to 147 by the end of the year, especially if the American exceptionalism story prevailed and the Fed remained tighter than other central banks with regard to its policy outlook. But now things have changed, right? If we do get this early election, and it looks increasingly like we will get a pre-October election, maybe in the spring in Canada, and if the Conservatives win, which also seems likely they will, certainly if the vote were held today, it looks like they would win, well, then we would have to change our view. In fact, we're in the process of changing our view right now, contingent on seeing a little bit more news with regard to the timing of the election. But if this is the case, instead of 147 for U.S. dollar Canada versus Canada, by the end of this year, we could be looking at dollar CAD in a 130 handle. I mean, we could go back down to the bottom of the recent trading range for the U.S. dollar versus the Canadian dollar. So this is altogether possible, and because it does seem like it's starting to materialize, we've told clients that if they are long U.S. dollars against the Canadian dollar or short the Canadian dollar, they should consider covering that trade. Another good trade is potentially to go long the Canadian dollar against the euro, because whatever political resolutions are out there, they're likely to see the light of day in Canada before they see the light of day in Europe.
Thank you for your insights and ideas today, Thierry.
My pleasure, Mark. Thank you.
Thierry Wizman,